Hello there! Gold is bouncing, crude oil is bouncing, and copper is bouncing. That's all while the US dollar is declining. Welcome to myfinanceteacher.org, where our data-driven approach guides every step of our journey towards maximizing profits. To join us, simply go to myfinanceteacher.org, scroll down a little bit, and click this Join Now button. Do it right after the video. Right now, though, let's start our market review with precious metals. The last time we looked at precious metals was over here 13 days ago. That's when we were expecting a bit of a decline in gold before the continuation of the rally into the second daily cycle. Looking at the chart, that's exactly what happened so far. As we mentioned, gold indeed declined to test this 200-day moving average and has bounced into a new daily cycle since then. Before looking at the details of gold, though, I do like to look at what's happening to the US dollar. And a couple of weeks ago, we also mentioned that there was a possibility that the daily cycle on US dollar has topped early, with an expectation of a decline into the end of this daily cycle, as well as this intermediate cycle that has been going on since July. So far, that's exactly what dollar has done. It dropped below the 50-day moving average, tested it from below, and continued down towards that 200-day moving average. Looking at the duration of this ongoing daily cycle, it's still pretty short. If we look at this recent low yesterday, that would give us a daily cycle lasting for only 28 days. Usually these US dollar cycles last for around a couple of months. Hence, I don't expect that the daily cycle has finished yesterday, meaning that I don't expect a bounce into a new daily cycle over here. Instead, perhaps a smaller bounce from the support of the 200-day moving average before breaking below that support into the end of the daily and perhaps the intermediate cycle in the US dollar. And that, of course, would bring us closer to the average duration of these cycles. And if dollar does indeed break significantly below the 200-day moving average, that would be bullish for precious metals. The ongoing daily cycle is still very young, it's only 9 days old. Usually these daily cycles in gold last anywhere between 1.5 to 2 months. Of course, sometimes they do stretch. And I expect that during this ongoing second daily cycle of this new intermediate cycle that started in early October, I expect that during this second daily cycle, gold is going to test the all-time highs that have been tested repeatedly already. Call it something around $2070 per ounce before a decline down into the end of this short-term second daily cycle. And whether the third daily cycle of this intermediate cycle will break to new all-time highs or not remains to be seen. There is, of course, a range of possibilities into that third daily cycle. However, one of the most likely ones is the one that would perhaps be the most painful for the majority. That's how the markets work. Hence, a likely scenario is a failed break to new all-time highs, given that it happens in the third daily cycle of the ongoing intermediate cycle. The intermediate cycle by then would be relatively old. Hence, it would already be due for a significant intermediate level correction rather than a short-term level correction down into that intermediate cycle low. This sort of a failed breakout above this all-time high would perhaps trap quite a lot of traders, and that's exactly how the markets work, giving us another buying opportunity at the end of this ongoing intermediate cycle. In the longer term, though, I am quite certain that gold is going to finally break significantly above this triple top, and I've talked about these longer term expectations in some of my older videos. Links are down in the description below. Next, let's move on to crude oil. Again, in that same video from a couple of weeks ago, we did look at crude oil together with precious metals and the miners. And again, what we were expecting on crude oil back then is a continuation down for a short while into the end of the intermediate cycle to break below the 200-day moving average, give us a bit of a scare for the traders, which would likely turn out to be our cycle low on crude oil. And so far, since then, since the last couple of weeks, that's exactly what crude oil has done. A bit of a scare to go down deeper below the 200-day moving average, followed by a significant bounce, which likely signals that the cycle low is behind us. giving us a cycle lasting for 141 days. Usually the crude oil cycles last for around 157 days on average, that's since the middle of 2017, but of course this duration of the cycles can vary quite a lot, from the shortest cycle of 104 days over the last 6 years to the longest lasting for 233 days. Zooming in a little, what would I see on the crude oil over here is a bit of an inverted head and shoulders in the shorter term to bounce down from this support resistance of the 200-day moving average, which would likely be broken on the next attempt. And moving on from the shorter term to the longer term, again, similar to precious metals, I am bullish on energy, specifically including crude oil, and perhaps we are going to see a bit of a cup and handle formation on crude oil in the longer term. Luckily, I and the members at myfinanceteacher.org have already been positioned for a nice rally in energy. For details on the particular vehicles used, as well as on more in-depth analysis, again, join us at myfinanceteacher.org. Moving on to copper though, again, at the beginning of November, I mentioned that copper was likely starting a new cycle. Let's jump into the copper charts. Over here at the beginning of November, when copper was still below its 50-day moving average, I was expecting copper to continue rallying into a new cycle. So far, that's exactly what happened, and copper has since gained around 4%. Zooming in though, the current cycle is so far only 30 days old. And usually these copper cycles last for around 131 days on average, again, since the middle of 2017. The duration varies quite a lot, from the shortest lasting for only 59 days to the longest lasting for 198 days. But as you see, most of those do last somewhere slightly above the duration of 4 months. Hence, this ongoing cycle is still pretty young. In the short term, we are likely to see a bit of a pull down from this resistance of the 200-day moving average before that resistance is likely broken during the next attempt, which would eventually lead to the top of this ongoing cycle before an eventual correction into the end of the cycle or into the cycle low. Again, for much more thorough analysis, including a look at sentiment and seasonality, consider joining us at myfinanceteacher.org. Just scroll down a bit and click this join button. Do that now. Have a wonderful Wednesday. Bye bye.